Hey, everybody. Welcome back. Happy Wednesday. Welcome back to the Real Deal Pod with Allister and Geoff. I hope you guys all had an amazing long weekend and a great start to the week so far. Geoff, my man, how you doing? How was your long weekend?
I'm doing well. Long weekends always mess me up a little bit. I can't believe it's Wednesday. My brain and body is telling me that it's Tuesday.
Right.
But yeah, went and did a little bit of a road trip. Went up to see my mother and family up in Kamloops.
Oh, awesome.
Yeah, I ate a little bit too much. I think I came back about 10 pounds heavier. So I'm back up to my fighting weight.
Right. Good
205.
work. Good work, my friend. Good work. Yeah, me, man, I agree. I've been seriously all over the place today. Thinking it was Tuesday for the majority of the day. Also, for a little bit, I thought it was Monday. Because no, it's crazy because so last Friday, the kids had a Pro D day, right?
Yeah.
And so Pro D day and then long weekend, right? They just went back to school yesterday. So it was a long day. It was a long 4 days off, and not just because it was a long, not just it wasn't a long 4 days off in a negative way. It was birthday week. So it was my son Casey's birthday on the 18th, my wife Michelle's birthday on the 20th. It is my daughter Elizabeth's birthday tomorrow on the
Wow.
23rd. It is my brother-in-law Sean's birthday on the 25th. It is birthday week this week. So it has just been crazy and insane. And then, just to celebrate, I got a listing coming up. It's going to be actually a listing I'm super excited about. It's a net zero home.
Okay.
Yeah, so it'll be interesting. I actually am gonna want to talk to you about how a net zero home, if that in some way helps a mortgage or any way in any shape or form. We won't
Well,
have to
well,
talk about address that on this pod, but we can save that for offline and then maybe chat about it next pod.
Well,
Something
well,
like
let's
that.
break it into simple language because a lot of people do not know what a net zero home is. So
Yeah,
why don't we put that into a language or a meaning that
sure.
people understand?
Yeah, so a net zero home is a home that's essentially built so you have zero bills. It's a fully self-sustainable home. It's got I believe, and I'll get the exact number for the listing, but I believe it has 48 solar panels on it. A complete the heating system is completely self-ran, and it's an amazing home. So yes,
Yeah.
net zero. The only thing, because they're big gamers and such, they run the servers through the
Yeah.
property. So I mean, you should see the basement. It is set up for whatever type of systems you want to run in this basement. But that's, yeah,
So net zero means pretty much zero
zero bill.
emissions coming out
Right.
of the home,
Zero
right?
emissions. Right.
For
Yeah.
simple language. And that's a very simple answer. Like as far as financing goes, it doesn't really matter if it's a net zero home or if it's 100% emission home.
Okay.
At the end of the day, again, it does come down to property type because if that is a remediated grow up, if that's a mobile home, if that's a log home, if there's something that doesn't make it overly marketable, then yes, there can be issues with the financing or the increase of down payment or, insurance required on it. But a net zero home, again, that would have no problems getting financing on it. It just would come down to income, come down to what your debts are. What is your down payment then determines your purchase price. So there's really no negative effect to a net zero home. So
Okay.
simple answer.
But easy answer. But what it will do is help you understand that, yes, now you just have your mortgage payment to deal with. And
Absolutely.
now you're from the existential bills, you're now fine from your extra
Yeah.
bills and stuff like that. You're in a positive position. So excited about this property. Two really great clients that I've just been able to pick up. And then just quickly, I had actually a sad story about a new client that I just picked up that had a terrible experience with another realtor. And so I just, to my colleagues out there, I would just really like us to be cognizant of, we don't, our clients are our boss.
Yeah.
We're not their boss in any way, shape, or form. Um, we need to be very, very careful on how we articulate what we will supposedly, and I'm using air quotes right now for the people on the podcast that can't see me, for everybody out there, what we will and will not do for them. We do not put it as we will not do this and you just sit and accept it and do whatever we say. That is ridiculous. So I had a wonderful conversation with this new client of mine who now feels a lot better, and is very excited about the journey to go buy her first home. But it was truly disturbing, and I got really upset and super angry during the conversation over what went on. So
yeah, I think you make a good point. It's always very, very important to understand that when you are in the service industry,
yeah.
we are serving our clients. Our clients are not serving us and our needs. We are serving them and their needs. And I think clients need to understand that's how it works. And realtors, brokers, anybody within that service industry, doesn't even have to be a realtor or a broker. It can be someone that's even in a clothing store or wherever you are, your waiters. We are here to serve you.
Right.
You are not here to serve us. So I totally understand. There's nothing that drives me more crazy than when you're feeling like an inconvenience to somebody when you're in a service, industry or a service kind of thing. So
it's something that just perpetuates the negative stereotype that goes through our industries when we have realtors that maintain and carry on in that fashion, that we own our own company, therefore our clients, they should do and act beholden to us. It is a ridiculous concept. As I said, as I was talking offline, I teach the new agents that enter our brokerage, and that's the first part of the course, is having them understand that we have a boss that has the highest expectations out of any boss you will ever have. It is the public. It is our clients. It is our people. And we should always maintain that their expectations are the number one most important thing. It is not what we want. It is what they want.
Yeah.
Right. Yeah. And so just again, to everybody, if you are in that situation, understand that you can walk away, and that you can find somebody that is going to better satisfy your needs than somebody that is sitting there telling you what they will and will not do for you. It's ridiculous. Yeah. So with that being said, Geoff, let's get into the day, man. Let's get into today's pod, because I'm actually super excited with all of the new stuff coming up. We've got a mortgage announcement coming up. I know that you're going to touch on that. People have been sitting around waiting for. We got crazy amount of renewals coming up down the pipe. And so it'll bring us into perfectly segue into our topic today of what happens when we miss a mortgage, or what is the impact when we miss a mortgage payment. So
yeah, a couple dates that we need to kind of put into our calendar is June 5th. June 5th, there is a Bank of Canada meeting that will be taking place. There was also an announcement that our inflation rate is around 2.7%, which is the lowest our inflation has been in the last 3 years. So that was very encouraging to economists, and where they are believing, again, rub your crystal ball, where they are believing that our overnight lending rate is actually going to decrease come June 5th with the Bank of Canada announcement, which has a direct impact on prime rate. So there is speculation, we'll say, or there is discussion that our prime rate is going to drop 1/4 point come June 5th. Now, we've heard that in the past before, but again, this is something that basically is the new topic on the shelf. And so we're going to be hearing a lot about that, I think, here within the next, 2 weeks up to the Bank of Canada meeting. And I believe that once the Bank of Canada meeting announces that, and if that is to happen, I believe that we're going to start to see a lot of people that are on the fence in regards to purchasing jump off of that fence and really start to begin moving forward. There's a lot of people, and I think you can probably confirm this, Allister, there's a lot of people that are just waiting to see what is going to happen with rates. They're waiting to see what's going to happen with each and every Bank of Canada meeting. Our prime rate has stayed flat for months now. Everybody is just waiting for it to take that one dip. And you know what? I think once it takes that one dip, we're going to start to see a lot of people begin to move forward in the purchasing of properties.
I agree completely, Jeff. It's not just the buyers that are actually starting to fuel this. We are now, I believe, above 6,000 listings. So now what happens there is now we've slid actually into a buyer's market.
Right.
Buyers now have an advantage in the amount of choices they've got. The inventory isn't as limited as it has been in really since, oh my goodness, October of last year. We have just been in a state of, I mean, when we see 4,000 properties, people kind of think, oh, that's a lot of homes. It really is not. So now now that we've hit that crest in our listings, in the available inventory, we now have the buyers, to your point, that are on the sideline hearing that there's a potential rate drop coming. And I truly believe that we are in for a very, very active next few months.
Yeah.
Well,
So,
and that also everybody to be here. That is why I was always stressing for all of my clients to have a plan, because if it does get active, it does mean that we are going to start walking into multiple offer situations again, pardon me. So yeah. So everybody get ready.
Everybody get ready. Well, you know what we want to talk about this week is about mortgage payments.
Yeah.
You know, I think next week we'll probably talk about who knows what we're going to talk about next week, but something good. But what we want to talk today about is what happens if you miss a mortgage payment. Now, things to understand, and we've talked about this in the past, that 8 out of 10 mortgages are going to be renewing here by 2026. A lot of these mortgages are in rates of 2 to 3%. And they may be renewing into rates that are going to be high 4s to mid 5s, right? Who knows by the time that you get there. But I wanted to talk to people that currently own a home or are going to be coming up into renewals, and their rates are either going to double, which is going to have a direct impact on their payment, something that we call payment shock, or even a lot of variable rate mortgage holders that are currently in variable rate mortgages where their payment has increased 11 times over a course of a year and a half. And even those who are in a static variable rate payment where the static pretty much means your payment stays the same regardless of what the rate does, but how much is going towards the interest to how much is going towards the principal will kind of shift. So those who are in fixed rates that are renewing, we're going to see those fixed rates that are coming from 2 to 3% going into high 4s, mid 5s. We're going to see static variable rate mortgage holders that their payment has remained the same, probably going to transfer into a fixed rate of some sort. Their payments are going to rise. And then we have those existing variable rate mortgage holders, which are called adjustable variable rate mortgages, where those payments adjust up and down as the variable rate changes. And those people have already been on that roller coaster ride with their payment changing up to 11 times here over the last year and a half, maybe even a little bit longer. So there are questions. There is lots of conversation about what happens if I miss a mortgage payment. So I want to talk about that. What happens if you miss a mortgage payment? Because we are going to be coming into an environment where there's going to be payment shock, or we're already in an environment where there's a payment shock. And what are you going to do if you need to miss a mortgage payment? And again, there's a stat out there that 1 out of 5 Canadians are worrying that they're going to miss a mortgage payment. And the biggest group of people that are missing that have that fear are millennials. Actually, I had to Google what a millennial was because I had no idea when that year was. But it's anyone born between 1981 and 1996 is a millennial. And the other segment that is actually quite worried about missing a mortgage payment are the Gen X. I fall into this,
Yeah.
which were born from 1965 to 1980. So there is, that accumulates to about 53% of the people that are worried that they are going to miss a mortgage payment because of their payments going to be increasing to what they already are currently in.
Well, and I think that's a perfect thing to do because I think that's, I know with me talking to my clients, that's one of the things that they've asked about is what type of things they can negotiate maybe with their lenders to avoid missed payments and avoid possible foreclosures. Like what are maybe some of the things they can do to negotiate with them?
Yeah, the thing is it's not necessarily a negotiation. It's more communication.
Communication, right?
And I think that's one thing that we lack just as human beings is a good form of communication. I go back to 5 out of 10 or 6 out of 10 people end in divorce. Why is that? Because we are not good communicators.
Sure.
I won't throw everybody in that bucket, and I won't even throw myself in that bucket, but hey, we know the stories. But it's more about the communication. And I think if you are going to be missing a mortgage payment or you think you're going to miss a mortgage payment, talk to your lender. There are lenders out there that will allow you to miss a payment that is going to have no impact on your credit. So if you think you're going to miss a payment or you just or you believe that that's going to happen, talk to your lender. There is something within a prepayment clause or the prepayment privilege within a mortgage. It's called skip a payment or miss a payment. And if your lender does this, Toronto Dominion is one of them. If you have that conversation, they will allow you to skip a payment and it will have no impact on your credit, which is very, very important.
Okay. That's actually that one's super good. I didn't realize that to be honest with you, I didn't realize that was there. So then what are some of the proactive then steps that somebody can take so that they don't maybe get into that position? Maybe let's look at being proactive as opposed to being reactive.
Well, and even before jumping into that, let's understand the consequences if you do miss a mortgage payment.
Yeah, let's talk about the consequences, and then we'll get into proactive approaches.
Yeah, one of the things to understand is that most Canadian institutions, financial institutions, will allow you a 15-day grace period to make that mortgage payment up if you miss it before it gets reported to the credit agencies, right? One thing to understand is that if you have mortgage arrears, that is the worst arrears to have reporting on your credit bureau, because that is your biggest and most important debt. And it also is the one thing that lenders look at. Remember, it's your report card. If you are basically missing payments on your mortgage and you're the one that's going to be lending people money, how well will that reflect on you?
True enough. And it goes back, and it goes back to like what you had said, I know on a previous podcast, that if there's one thing Canadians do, they'll pay their mortgage.
Well, one thing Canadians will do is that they will never allow their property go into a foreclosure.
Yeah.
Right?
Yeah.
There are many Canadians that miss the payments, but there are very few Canadians that will allow their property go into a foreclosure. In fact, it's 0.15% of Canadians will allow their property go into foreclosure. Like that pretty much is nil.
No, it's funny. And it's true because we've taken so many steps with the stress test and all of those sort of things to minimize that. And it's one of the conversations that I've really, you really have to, well, not you, but myself, I have to constantly have with new clients is really helping them understand that the things that they see on HGTV, right, aren't the same things that happen here. And no, and I know we laugh and stuff, but but HGTV gives such a poor representation. Not a poor representation for them; it's a great representation because it's the U.S. market, and that really does happen, right? But here in Canada, it is not like that. So everybody likes to come out and say, "Hey, find me that deal, find me that foreclosure. And I have to explain to everybody, hey, listen, guys, that's not how it works here. Realtors are bright. We are always going to ensure that we get the most that we can for our clients. So very rarely are you going to see that property getting sold in a state where that client is not going to get their money back. And even when we are dealing with our clients in terms of what should I write in an offer when it does come to a foreclosure, I always have to remind them, we have to look at how many lenders, right, are wanting to get paid out of this, because they all have to agree on that accepted offer price. So if they're not getting what they feel is fair out of that offer, they're going to say no.
Yeah.
Right. So, yeah.
Yeah. Well, and again, like, as we say, very, very low foreclosure rates here in Canada. Missing mortgage payments, there are many Canadians that miss mortgage payments for various reasons. But just to kind of circle back, is understand that we do have a grace period of around 15 days. Most lenders will give you 15 days if you miss your mortgage payment to make that payment up. And I think that's very important because like we were saying is that if you miss your mortgage payment and it gets recredited and it gets reported on your credit bureau, and again, here in Canada, we have TransUnion and Equifax, that really is a big red flag for upcoming and future financing. Now, that also being said, Allister, there are times where you will miss a payment on your car loan. There's going to be times where you miss the payment on your credit cards. There's going to be a time where you're going to miss a payment on your student loan. And if they're isolated incidences, there can be a logical reason as far as why you missed it.
Right.
But if you have missed your payment on a student loan or a business loan or a consolidation loan or a car payment, and now on a mortgage, again, how excited is that lender going to be to lend you money? Because again, remember, your credit bureau is a report card of how you pay back debt. Right? Are you paying it back on time every time? And yes, there's always going to be isolated incidences where there has been a life event, or you just had a brain fart and you basically forgot. But if there's multiple arrears reporting on your credit bureau, including a mortgage arrear, it's going to be really, really tough for you to get financing. And remember, one of my favorite sayings is that your credit is as equally as important as your income. You can make $1 million. You can easily be able to debt service the mortgage that you're trying to do. But if your credit is poor, you're not going to get financing with a bank or a credit union. So again, it's very, very important to understand the consequences that if you miss a mortgage payment, the impact that it has on you, how many days you have to basically make it up, and understand, there's also fees that are going to be associated with it when you miss a mortgage payment as well. And that can be, depending on your lender, that can be anywhere from $25 to $200, depending on the financial institution that you're with.
Okay, great. Because that was gonna actually roll into another question that I had, that was the impact of missed mortgage payments on credit scores and financial penalties and stuff like that. Because that's also something that people really, really do need to know, that those financial penalties, those can be big, right? And they can be big to where you didn't recognize how big they would be, and then now you're like, holy cow, that payment is so big, I can't. It's unfathomable to be able to pay back now.
Well, and here's also the thing too, is, as of 2024, when mortgages are coming up for renew, as of today, all you have to do is sign renewal papers. You don't need to requalify. You don't need to do anything. The only time that you need to requalify when you're renewing is if you're going from one lender to another. Now, the one thing is that if you're missing your mortgage payments and you are doing it on a consistent basis, your existing lender is actually not going to renew your mortgage. Now you have to take this mortgage and try to find another lender. And again, going back to credit and credit scores, is that if all of a sudden now you don't have a strong credit, it may be a very, very difficult thing to get your mortgage renewed with another lender because your existing lender is now calling the mortgage because of your repayment history, because they just don't want to deal with that anymore, right? So now you have to take somebody that normally would just renew with by signing renewal docs. And I have a friend actually that he was going actually through a bankruptcy at the time. And again, his mortgage was coming up for renewal. Thankfully, again, all he had to do was sign the renewal documents and his repayment history on his mortgage was fine. And everything went smooth as silk. Now imagine that same person that's in a bankruptcy, it doesn't even need to be in a bankruptcy or a consumer proposal, but imagine that same person had poor repayment history on the mortgage. Now you have to deal with that. Now, who's going to lend to you when you're in the middle of a bankruptcy? Now you're going to have to force the sale of your property.
Right. So no, that makes absolute sense. That makes absolute sense. That brings back question now on in terms of when you are re-upping your mortgage, when you are renewing your mortgage, does it make sense to shop it around? Should you just go, let's say you're with TD and your mortgage is up for renewal. Does it make sense to just stamp it and go? Or should you take some time? I'm just asking, should you take some time to just maybe do a little bit of digging?
Yeah. Well, here again, you know how I love statistics. 8 out of 10 people will renew. 7 out of 10 people will renew with their existing lender, right? And we talked about this before. Why do they do that? It's easy. The lenders at times make you feel like you have no options, or you don't know that you have options. Right. I always say 8 out of 10 people will renew. 7 out of those 8 people are not getting the sharpest rates, because again, like we've talked about in the before, banks make their money in their second and third term, right?
Yep.
That being said, yes, everybody that is coming up for a renewal should basically be shopping it around, because again, 7 out of those 8 people are not getting the sharpest rates, because again, lenders understand that, hey, we know that 8 out of 10 people are going to sign. We know we don't have to offer the sharpest rate. We know that people may be a little bit undereducated as far as how the process works, and therefore that's why they sign 7, and that's where, and now they start making their money on the second and third term. So to answer your question, everybody, 8 out of 10 of people, again, that mortgages are coming to renew here in the next 2 years, shop it around, make sure you're going to get the sharpest rate, because if you renew with your lender and you don't do that, I can guarantee you, you're not getting the sharpest rate. The other side of that coin, Allister, is if all of a sudden you have a job loss, if all of a sudden you have credit issues, if all of a sudden there is some reason why you cannot take this to another lender, then yes, renew with your existing lender, because as of today, all you have to do, providing that your payment history is good with your mortgage, all you have to do is simply sign your renewal documents and away you go.
Yeah. That's what I was figuring. And that's the type of advice I like to be able to tell my clients. I can't tell my clients that because that's not my lane, the mortgage. I have to say, well, you should maybe reach out to other mortgage people to have that discussion. Yes, please, everybody. I can say that with Geoff now being beside me. Please shop it around. Don't stick with what you got, because you're 9 times out of 10 going to pay more than you would have had you just talked to somebody else.
Yeah. And understand what the process is and how it works, and understand that you do have choices, right? You don't have to be handcuffed to your lender. You do have choices. And people will always say, well, my lender loves me. Well, your lender loves you because you pay your mortgage on time every time. Stop making your mortgage payment. You'll see how much they love you.
It almost feels like we'll spend more time shopping around for a better cell phone deal than we will shop around for the rate on our home.
Yeah.
In all honesty, that's what it feels like sometimes.
Yeah, 100%. 100%.
Right? So sorry, should we lead maybe into the proactive approaches, or was there some other things that we wanted to touch on beforehand, or maybe what are
Well, I think if you miss a payment, it's just really important to understand on how you move forward in that, right?
Yeah.
And we talked a little bit about it. If you've missed a payment, contact your lender, right?
Right. Communicate.
Explain to them what's going on, explain your situation, make arrangements on how you can make up that mortgage payment. And maybe, you're with a lender that allows you to skip a payment.
Yeah.
Maybe you're with a lender that's going to give you grace outside of that 15-day period so it doesn't report.
Yeah.
But it goes back to what we were talking about, is just simply communicate what's going on. And you're going to be very, very surprised on how your lenders are going to want to work with you. The last thing lenders want to do, Allister, is go through a foreclosure process. It's the
100%.
last thing that they want to do.
100%. Yeah, I know that I just know that from my side. 100%. No one wants to go through all that mess.
They don't.
Nope.
The other thing is monitor your credit report,
Yeah.
right? If you see that is something that's not reporting, or if you see something that's incorrect, it's so important to monitor your credit report, because again, your credit is a report card as far as your repayment history. And that's going to tell you to pay your bills on, like how you're paying your bills. Are you paying that on time? So again, monitor your credit. Make sure you're addressing any kind of missed payments, especially if they're mortgage payments, because at the end of the day, your credit is as equally as important as your income. Pay your bills on time. How many times do we say, hey, I only owe $5 on my credit card. I don't need to worry about it. It's not about how much you owe. It's about how you pay. Or there's times where I'm so busy, I just forgot. But you keep on forgetting. So again, use your common sense, set up a pre-authorized debit with that provider. So again, at least you're making a minimum interest payment on it. And obviously, we've talked about this before, is make sure that your balance on your debt is no more than 30% of your limit. And if you can do all of that, if you miss payments, not necessarily on your mortgage, but on anything else, your credit is always going to be in good standing. It's always going to be where you need it to be. And it's going to make your life so much easier, Allister, when it comes time to do some financing.
Amazing. I had a quick question though. This might be for a client of mine. What if you're dealing with mortgage payments on a property for somebody that has passed on?
So if you are dealing with mortgage payments with somebody that has passed on,
Like they're the executor. So
and you're the executor, I think that's more of a question for a solicitor.
Okay, so if they miss a payment, you don't know, like if it's a payment is missed, let's say the payment is missed on the mortgage.
I think at that point, it probably, does that really matter? You're talking with somebody that's deceased.
That's what I'm thinking.
I think the executor probably has taken, again, providing that you have an executor, it's taken initiative as far as dealing with that financial institution. If you are, say, what do they call it? If you are the executor, and maybe it's not with a solicitor, I think you need to take the responsibility of dealing with that. And again, coming back to the communication. But if it is missed, again, you need to communicate it. The last thing you want to do is for you not to communicate that this person has passed. The bank believes that this person is living, and all of a sudden there's multiple mortgage payments that are missed because you haven't communicated as the executor, and then all of a sudden you're going into a foreclosure process, right?
Yeah.
So that does happen. So again, to anybody that, number one, have a will, many of us don't. Number two, make sure that you are signing an executor to your will that is responsible and organized. Many of us do not. And back to your question, as we're talking about this out loud, if someone has passed and the executor isn't taking the necessary steps to deal with the bank and inform them as far as what's going on, it is very likely what could happen is that could go into a foreclosure because of the lack of communication and because of the missed payments.
Okay. Let's see, there you go. So they could actually put the property into foreclosure, and that's not, again, not something that anybody wants to be in or be going through.
Yeah. And let's talk a little bit about the foreclosure process. And again, circling back to, as far as the statistics here in Canada, 0.15% of properties go into foreclosure. So like I've said before, the one thing Canadians always do is they will pay their mortgage. Yes, it may be late, but they will never allow, or very rarely allow, their property to go into foreclosure, right? 0.15%.
I know, it's crazy. That
It's
number, when you
crazy.
told me that number, that floored me. That goes against because I always say 1%, right? No,
Yeah.
that is crazy.
And I think that's something that Canadians can be very, very proud of,
Yeah,
right? Is
100%.
our responsibility of managing our biggest debt. Now, again, that doesn't mean that we get into a distressed situation, but then we will sell it, right? We don't allow it to get into a foreclosure. So again, when it comes to fiscal responsibility, when it comes to properties that we own, Canadians are very, very good. Now, again, if we're going to talk about credit card arrears, or we're going to talk about car loan arrears or student loan arrears, Canadians may not be very, very good. But again, we won't pick on people too much. We're just going to go with, hey, Canadians are fiscally responsible with the biggest debt that they have in their life, which is their homes.
Exactly.
Right?
Yeah.
But if we do go through a foreclosure process, it's very, very important to understand what that process looks like here in British Columbia. So if we are to go through a foreclosure in BC, it's known as a judicial sale or a foreclosure, and it can be quite a lengthy process where it can take up to 6 months and or longer, right? The title of the house is transferred to the lender. Basically, the lender controls the sale of it. Basically, at the end of the day, the property gets sold, all the secured debt gets paid, the legal cost gets paid, and then whatever money is left over goes back to the original owner. Now, do keep in mind, if there is still money owing on it, it's very likely that that owner is now going to get sued by whoever they owe that money to. And quite often, that's the insurer.
Right.
Right?
Yeah.
In Ontario, Newfoundland, New Brunswick, Prince Edward Island, the process of a foreclosure actually starts with a notice from the lender. It gives those individuals 35 days to catch up on payments. And then if they don't rectify the situation, that ownership actually transfers to the lender without court involvement. So it's a very, very, very simplified process.
Wow.
Outside of British Columbia.
Yeah, that's interesting.
Yeah.
I'll tell you something. That's an interesting thing with dealing with foreclosures from the real estate side, that people out there that probably don't know. When you receive so when you view the property, the date that you viewed it, it may not look the same way the day you receive it, and there is no recourse for that buyer for how they've received it. Right. So they can walk in on a Tuesday and it could look immaculate and beautiful and say, okay, I'm going to buy this foreclosure. I'm so excited. And they could get possession, let's say on the Saturday, and on Friday night, those owners went and basically absolutely destroyed the home. When they take possession, they take it as is, and there's no recourse for the buyer. So just for all of you guys out there that always believe that foreclosures are the way to go, just again, reach out, let's have a discussion so that you can learn that foreclosures a lot of times should be the last, unless it's an amazing, you walk away from thing, it should be the last thing you want to look at, because they're not the greatest things to go through. Absolutely. Amazing, Jeff. That's all you got for me today? That's all. Well, it's actually a lot. That's a lot. So thanks, my man. Amazing day today, buddy. Amazing day. Plans for the rest of the week quickly before we hop off?
You know what? My mind still is Monday, Tuesday, whereas I can't even think about tomorrow. But actually, I lie. I'm going on a big bike ride, 120-kilometer bike ride on Saturday. Going to do the seawall again, 10-kilometer run on the Sunday. And I think I'm actually playing hockey on the Friday. So, it's going to be an active week.
Look at you. That's fantastic, man. That's fantastic. Well, you enjoy,
that's called midlife crisis. That's called midlife crisis without buying the Corvette or
without buying the red Ferrari, the red Porsche. Yeah,
Exactly.
yeah. No, for me, it's same thing. Like I said, I have birthdays. I've got listing coming up. I actually have to return a call that's called a couple of times as this pod is going on because I'm helping one of my new agents, as I was telling you before the pod started, close his now second deal. So very proud of him. Such a great agent at our brokerage. Love him to death. Canmore Randawa is his name. I'll give him a little bit of a shout out. He's amazing new realtor, doing great things for his sphere. So couldn't be more proud of him. Yeah, it's a busy week. Wish everybody a great week. Thank you all for listening. Shout out to my class actually too, who has started listening to the pod, and for the two people that are listening in Mexico now. I forgot to mention that one to you, Geoff. We are now hit Colombia and Mexico. So shout out to everybody out there that is listening. Again, our reach is growing. We couldn't be happier about it. Remember, visit us, Spotify, Apple Music, wherever you get your podcast. Come visit Geoff and I on our social media accounts too. I never promote our social media accounts, but we are on Instagram, we are on Facebook, we are on LinkedIn. I don't know if Geoff is on TikTok. I am not cool enough to be on TikTok. I have not put myself on TikTok yet. I don't understand it. So I'm not there yet. But if Geoff is on TikTok, visit him there. Are you on TikTok, Geoff?
You know what? Not so much anymore. We did have a little bit of a presence on there, but yeah.
I put one video.
Let's not talk about TikTok and what's going on TikTok, but
that thing. Oh yeah, that
that's
craziness. Yeah, TikTok's not going to be around until we can find somebody that will pay for it here. It's already built. So we'll all be doing what Vines next. Vine, and so it's funny. I had a friend of mine talking to me about Vine, and they're like, "Yeah, Vine," and I said, I knew about Vine, like, what was it, 10 years ago? Right? Vine was actually TikTok before TikTok was TikTok.
Oh, okay.
Yeah, Vine was like the first ever video stream, would like send a video out to somebody. It just never took off. And so it took now banning TikTok across the world, other than one country, then for Vine now to take off. So if Vine works, we're all going to be vining. Is that what it's going to be?
Check us out on Vine.
I have no idea what this stuff means. I'm scared. I won't be cool enough for Vine either. Only to know about it, not to do it. Anyhow, guys, amazing. Thank you guys all for listening. Have a wonderful day. Thanks. And we will talk to you guys again next time.
Yeah, y'all have a good one. Take care.
Cheers. Ciao. Bye, guys.